What's up, guys, and welcome to Optical Capital. This is where we envision the price movement before the move occurs. That's what we basically do over here. So today I'm going to share with you guys a very simple but profitable strategy that you can use to trade volatilities. You can use the strategy to trade volatility 10, 25, 50, 75, 100, 150, all volatilities, okay? So this strategy uses three indicators, okay? The first indicator is the moving average with period 21, shift 0, method simple, apply to close, pixel 4, color blue, or you can use any color of your choice as long as it's different from your screen background color, okay? Then we click done. Then we are going to add another moving average, okay? But this time around we change the period to 10. Let's use period 10. Moving average with period 10, shift 0, method simple, apply to close. Style, let's make it 2 pixel. Color, let's make it black. You can use any color of your choice as long as it's different from the color of the first moving average and the color of your background screen. Then click done. The last one is the oscillator RSI, okay? Relative strength index oscillator, okay? So this one you leave it to default settings, then click done. After you do this strategy works by this, guys. You are waiting for a cross. You are looking for cross. When the 10 period moving average cross the 21 period moving average, you enter. Okay, but is that all? No, that's not all. You have to be strategic about this so that you can be profitable. Okay, so first things first, you are going to use 1 hour time frame first, and you do what? You wait for the RSI to be oversold. Like in this case, the RSI was oversold where? Here. You see? The RSI was oversold here. When the price was here, which was on the 3rd at 7 o'clock, the price was oversold. Then what do you do now? You know that this price is oversold, and when the RSI is oversold, the price might start to head higher. But it doesn't just occur like that, because the price can stay oversold for a very long period of time. So you have to go to lower time frames, like 30 minutes or 15 minutes. So on 30 minutes, when we go to 30 minutes, what do we see? Let me show you what is happening here. From the day the price was oversold to where the price changed direction. See this, observe this, guys. Okay, then you come here again to the RSI. What was the RSI doing? It was doing the opposite of what the price was doing. When the price was going down, the RSI was going up. So what do you have? You have a divergence, RI divergence on 30 minutes. Go to 15 minutes. On 15 minutes, the same thing is still happening. The divergence that you saw on 30 minutes is still happening on 15 minutes. So let's remove this, okay? But this is not enough, okay? This is not enough. You have to also observe the reversal candlestick patterns, okay? The candlestick patterns that are happening. What was the candlestick that was happening here? Look at this bullish engulfing. You have this bullish engulfing. Let me zoom in so that you can see it properly. This bullish engulfing. On 15 minutes, we have this bullish engulfing. But is it enough? No, it's not enough. Go to 30 minutes to see the candlestick that formed there. On 30 minutes, we have this candlestick, this hammer candlestick. You see the hammer candlestick? Yeah. So hammer candlestick, it's a reversal candlestick pattern, okay? It just shows you that the price is rejecting lower prices, okay? Then you enter. After you enter, you can enter on 15 minutes or on 5 minutes. You have to get this cross. Once you get this cross, now your strategy is now confirmed. You have confirmed the price on 1 hour. You have confirmed the price on 15 minutes. You have confirmed the price on 30 minutes. You have even confirmed the price by divergence. Okay. Now you know, okay, this price is really going to reverse. Okay. Now you place your entry. What I like to do first is to place only one entry at the beginning to see if this is really a reversal or this just a minor pullback or retracement. Now that I was sure of this, I placed an entry and I waited and observed what this price is going to do. Okay, the price went up, as you can see. If you know chart patterns, you can see that the price went up from here to here. The price went up, then came down, and instead of coming to this down low here, the price started heading higher again. Now once the price break this, you know now I have an uptrend. Okay, you have a 1 2 3 move. Okay, Elliott wave 1 2 3 move. Now you can place more entries, and you can also use this. You can also use 21 period moving average as a what? As a support, because when the price came down here and touched the 21 period moving average, it was rejected and went up. The price came down, touched the 21 period moving average and went up. The price came down and touched the 21 period moving average and went up. So you can use the 21 period moving average as a what? As a support. Every time when the price tries to touch the 21 period moving average, it gets rejected. You can see. So I place my second entries here and I place other entries here. Okay, now I'm certified that this price is heading higher. So what do? Now I put a trailing stop. I start to trail my profits so that if this price was to reverse, I'm not going to lose a lot. But how do I put my take profits? First, I will have to go to a higher time frame like 4 hour. Okay, then on 4 hour, let me remove this Fibonacci. Then on 4 hour, I had something like this. You see, the same divergence that we saw on 30 minutes, 15 minutes. On 4 hour, we also have the same divergence. Okay, now I'm certain, wow, this price is now reversing. I have confirmed it with everything that I know. Okay, I have confirmed with everything in my arsenal. Now I put this Fibonacci tool. This is where Fibonacci becomes useful. Now I'm going to put Fibonacci from up here up to here. Okay, now these are the levels where the price might find resistance and go down. So now you have to know that the thing with Fibonacci is like this. If price is on a trend, if the price is on a trend like this one, the price won't respect the level 23.6, 38.2. If this price is on this downtrend, the price is going to respect level 50 or level 61.8. But just to be safe, I'm going to put my take profit just below level 38.2 because I believe that I have made enough from my first position, second position, third position. This is a very good profit. Okay, now I'm trailing this profit. Okay, I'll teach you more about trailing stops in another video. For now, I just want to show you this strategy. Okay, so when you have confirmed, all your conditions are confirmed with this strategy, you enter. Okay, you use lower time frames for entry, such as 30 minutes, 15 minutes. Okay, you can use 5 minutes too, but if you are using 5 minutes, you have to be sure that on 1 hour the price was from oversold or from overbought if it was an uptrend. Okay, now another thing that you have to know about this strategy is this, guys. Okay, once you get this divergence, the price, let me do this, let me show you this. Once you get this divergence, this RSI divergence, the RSI, when it's diverging, it has to be above 30. Okay, if it is still below 30, you don't have an entry yet. You wait for the RSI to be above 30, then you enter. And when you enter, that's when you will use Fibonacci tool to place your take profits. Okay, depending on how you have analyzed this, you can put your take profit at 23.6. You are still going to make profit. You can put it here or you can put it above here and keep moving your stop loss, okay, or just use a trailing stop, and then once the price breaks this, you will know that you are going to benefit even more, okay. So that's what this strategy is all about. Now let's go to other volatilities like V10, okay. The same thing has happened here. Look at this, okay, look at this. On 1 hour the price is what? It's oversold. You see, it's oversold on this day. This was on the 30th of here, on the 30th of April. I think that was when, was it Sunday? Yeah, it was oversold. Now you go to lower time frames, okay. Now you go to lower time frames and you are going to look for the 30. It was here. Now, do you have divergence? No, you don't have divergence yet, okay. You wait. What do? You go and check other conditions like a what? Chart patterns, okay. You are going to look for bullish engulfing patterns, and you are going to look for what? And you are going to look for this cross to occur. So if you were to enter this, you are going to enter somewhere here at this candle, somewhere here, and place a stop loss just below this candle here, okay. You can do this on 15 minutes to get earlier entries, okay. Let's go to the 30th. Yeah, on 15 minutes you're going to get a very clear confirmation, because you are going to get this on 15 minutes, okay, this. So if you don't get an entry on 30 minutes, go to lower time frames like 15 minutes. But you are ought to be careful, because you have to confirm all your conditions from 1 hour. So on 15 minutes you have this divergence, you see. Now what do? You are going to look for candlestick now, candlestick patterns. You are going to look for reversal candlesticks like bullish engulfing, hammer, you see, or just wait for the cross just to be sure, okay. But still, even if you are using 1 hour, you are going to get entry here with this candle, with this bullish engulfing, I mean with this hammer candle, this one, this way you get entry on 1 hour. And what do? You place your stop loss just below here, okay. Give it a space to breathe, then you just let the trade roll, because you are going to go to 4 hour and put a what? And put a Fibonacci tool. Once you have put your Fibonacci tool, you are going to get levels of where the price might make a reversal or a pullback or a retracement. Then that was going to be your take profit. So this strategy works on all volatilities, but you have to use other conditions such as chart patterns, bullish engulfing patterns, divergence, and wait for the cross, okay. Just don't rely on the strategy on its own. You have to observe the patterns that are being formed. You have to observe other things, such as, like in this case, look at this. We have this top, we have this bottom here, and we have another bottom here. So this is what? This is a double bottom. What do? You wait for a candlestick, a reversal candlestick like this one. This is a bullish engulfing candlestick. You can see it has engulfed all these candles, okay. Now you enter on this candle and you put a stop loss here. Then the price start to roll, you see. So this strategy works on all volatilities, guys. You can use this strategy, but before you use it, try to back test it so that you can get a clearer idea of what is happening. And also another thing, let's go to volatility 50, the one that I entered, okay. This level where I entered, this level has been tested a couple of times before. This level has acted as a support before, okay. This level was tested before. I did not just enter because I said no, all my strategies are, all the conditions of my strategies are confirmed, I'm entering. No, the price, that level has been tested before. Check this. Let me make this line red so that you can see what I'm talking about. So let's go to the past. Let's go to the past history, the past data, and see where this level was touched, okay. You will see that this level has been tested. Oh, this is taking way too long. Let me just do this on 4 hours, okay. so that you can see when was the last time this level was tested. My entry is somewhere here, and this level was tested somewhere here. Okay, let me go back. You'll see, you see where my first entry is. This where this level was tested. This level has acted as support in the past. Okay, so you have to also check, has this level, oh, also here this level was a what? It was a resistance. This was a resistance. Then it acted as support. You see that this level has been tested a couple of times. Here it was a resistance also. You see, you have to confirm this first. You don't just enter because you feel like entering. Okay, you see, this level has acted as support and resistance a lot in the past, and that's what we are supposed to do, guys. Okay, the strategy has its own conditions. I have stated them. Follow them, follow the time frames analysis, and also check if that level has acted as support in the past, and also use RSI to see, use the RSI oscillator to see, can this price really reverse like I think it will. Thank you, guys, and I'll see you on other video. Okay, I'm going to make very good videos regarding entries and take profits, chart patterns analysis. Let me say all trading insights. I'm going to be sharing with you guys trading insights. So subscribe to the channel, share this video with your friends, use this strategy to get more good entries. Okay, and thank you. I'll see you in another video.